Welcome to another day in the Matrix. This is Red Pill Podcast number 90. We're going to be dedicating this one to the holidays. We'll call it our holiday special. It has been a very interesting week in this market, and because I'm dedicating this to holidays, I decided to add some additional analysis where we'll be getting into the Dow Jones, the S&P, the DXY, and as well the total crypto market cap chart. So we're going to be adding on a little bit more to our analysis section. Going to have a shorter introduction today. And I just wanted to say I am so grateful for the Wolf Pack. It's amazing. We're coming on to the close of the year 2022, and we're just getting started. Just another year in the Matrix, but it's amazing to watch how everything has unfolded throughout this whole year. And I know there's a lot of members that have been here with us since the start of this year, so it's just amazing to be together and to have seen this all unfold the way that it did. So in typical Red Pill Podcast fashion, we're starting this out with gratitude and love for the community. Appreciate every single one of you. And before we get into this, get relaxed, grab yourself a cup of coffee or tea, or if it's the nighttime, a glass of wine, a beer, or a beverage of your choice. It's going to be packed full of information today. We are going to be just going over and recapping some of the key dates that we've pretty much been following up on for the past week or so. We saw how the World Cup turned out, and kind of, a little bit of a joke yesterday when I was doing my live stream. If you haven't watched my live stream, it's posted and available for the community. And around the 43-minute mark, I started basically giving my conclusion on how I thought the World Cup would go. And I went with Argentina, and I got a bunch of updates this morning. Argentina did win. And I just wanted to maybe bring that up again, because if you guys revisit that live stream and rewind back a couple minutes to pretty much where I start discussing the World Cup and the two teams in the finals, you could see a little bit of the methodology. I kept it very, very simple and more intuitive. And I think that that's actually how decodes become more refined, if you will. I know that there's a process of learning and building and developing the skills and the foundation and the basics, and knowing about esoterica and how to even, utilize some of these more complex maths, like going into prime numbers and Fibonacci numbers and connecting it all together. But I think that this will show you just how easy decoding could be when you remove the mind and kind of go more intuitive. We did make a call on the Super Bowl back in February, and it was with very similar decoding tactics. I used a very, very similar methodology. So definitely go check that out. Again, I really didn't keep up with anything regarding this World Cup or who's playing in it, and I just waited till the community told me what was going on. And kind of fun to watch how that all unfolded, I guess. For any of you betted on it or whatever, congratulations if it went in your favor. But anyways, getting into things, just to remind everyone, if you are new here and you have yet to get Discord access, go ahead and send me a direct message here on Patreon with your Discord username and the last 4 digits after your username, and I will reply back to you with a Patreon message with the Discord server invite link. So it is, let me see. We've been doing pretty well on the voting system for our altcoins, so let's keep it up. We were able to get 4 different coins for this week. I could have went with 5, but since I decided to add an additional 4 parts to this TA section with the Dow, the DXY, and total market cap, as well as the S&P, it wasn't, I don't think we would have the room to be going over more than 4 additional altcoins. But nonetheless, we will be covering Hex, Thor Chain, Rune, Theta Token, Theta Network, and reserve rights. So next week, again, let's mix it up. You guys put in your votes for the coins that you want me to look at, and the ones that get the most votes are the coins that I will select. And next Red Pill Podcast, I believe, will be the last one of the year. Yep, I believe that will be. So really amazing to have watched this whole year go by. As I said earlier, I mean, damn, there's been so many amazing moments and just so much decoding that's been shared and watching the market unfold the way that it has. And here we are. We're just kind of wrapping things up. So let's get into some dates. We're well aware that Saturnalia started yesterday, and this festival will be going on through the new moon on December 23rd. So remember that, through the new moon. And as well, not as important, I brought this up last week, but we do have Hanukkah started today, and it will be going through Christmas until December 26th. So let's get into some date connections. The 18th, which is today, this is pretty amazing connection actually. If you take from today over to Rosh Hashanah, the last day of the Shemitah, you're going to see we get an 83. 83 days, and 83 is the 23rd prime number. And that matters a lot because Rosh Hashanah itself had a 23 as its date numerology. We know that the day later we entered the Jubilee, which is 23 in Chaldean. And again, we have all those 23 connections that we've been talking about. So just consider that 83 is the 23rd prime number. And what makes this more important is it will be 2 months and 22 days, the 222 connected to the 222 year. And we just left the Hebrew year of 5782, which was a 22. So we're getting some big connections here. Another thing is we have that 72. Again, that 72 comes back to Bitcoin with 72. And there's your 23, just like I told you with 83 being the 23rd prime number. So I'm just bringing this up because the stock market will be opening up later tonight with the precious metals market and Forex. And that could bring some added volatility to this weekly close for the crypto market. And remember, we will have next Monday, the 26th, the stock market's going to be closed. So I actually am feeling that they're going to bring a lot of volatility into this week just because we know we have that 3-day weekend. With Christmas landing on a Sunday this year, Christmas Day observed being a Monday, it shakes things up a little bit. And just something to keep in mind, everyone, because we have that new moon at the end of Saturnalia, and that will be transitioning into that 3 to 4 days of crypto trading alone. Okay, so keep that in mind. And that's why I'm bringing up today, and the connections with today could be significant, coming back to that number 23. And just to let you know, 23 is a very positive number. It's a very powerful number. 23 is the 9th prime number, and the number 9 is very, very important. If you look into the Tesla 369 code, you know, that stuff's more exoteric, but that's a good starting point for anyone who wants to learn more. The same thing when people talk about frequencies. You might have heard people talk about like 440 frequency versus 441, and really the deeper connection that could be made here is when you add up those individual numbers, it's going to tell you the outcome of what that will be. And that's what numerology is, right? You're taking the numbers, you're adding them together, and then you're reducing them down to a digit below 10, so single digits. And the 4 plus 4 plus 1, you get a 9. 440, you get an 8. Think about this. And there's a difference in the way that those vibrational frequencies affect the physical realm, because all things at the end of the day is just vibration. You know, there's nothing actually physical about this realm. We're perceiving it as physical because we're jacked in through our central nervous system into this simulation. And that's why these numbers and frequency are manipulated the way they are by the apex predator. They know that this is how you can alter behavior, the mood, overall, motivation that somebody might have. So that's on the other side. You could use it as a tool instead of how it could be used as a weapon. You could use it as a tool to actually balance your chakras, to balance your mood, to uplift you, to motivate you, to give you energy. And anyways, I didn't want to go too deep in the esoteric, but the 9 connection to the number 23 is huge. 9th prime. And then the biggest one, I would say, is one I don't talk about too frequently, but in Gematria, we have Uranus being the 23, and Uranus being Father Sky. Father Sky, the last toroidal imprint of this realm. This is very, very important when you start getting into esoterica and start getting into these connections. And you probably are well aware that a lot of top athletes wear this number 23. That's not by accident. So let's move on. I know we just dropped a lot of gems there, but I want to give you guys the most value today as possible with no filler. So naturally, tomorrow is going to be the 19th, which is 2 months and 23 days connecting to Rosh Hashanah. That's the 223, which ties back to Skull and Bones, the 322 or 223 code. Remember, if you type out Skull and Bones, you're going to be getting, if you type out Skull and Crossbones, you're going to be getting the 223, and that is their logo, and that logo is coming back to death symbolism, which ties to the Grim Reaper, which ties to Saturn. Okay? So this is really critical with what I'm telling you with Saturn right now, because this date numerology that we're getting tomorrow, the 19th of December, is a 73, and 73 is the 21st prime number. All right? So we have that 21st prime as well. This is separated by 12 weeks, and this is the day leaving 12 days left in the year, okay? This 21, the mirror of 21 is 12, and in alchemy, you always mirror. So we're getting multiple connections to Saturn here, multiple connections to this number 12. And remember, back on December 12th, the 12/12 date, with the 12 date numerology, this was the day that Sam Bankman-Fried was arrested. And we were able to determine that something would happen on this day because of those connections. And you have that big 77 days connection to Rosh Hashanah, which had the 77 date numerology. I mean, this day was so important. It was so crucial. And we saw what happened. The biggest conversation and topic on the world stage right now is FTX. Like, seriously, besides the World Cup, it's pretty much been Sam Bankman-Fried and the FTX scam. And I know that's hard to believe for some people, but I'm hearing it on all popular mainstream media channels. It has become the most trending thing. Even Joe Rogan and his minions that have that podcast, they discuss it quite often. So I'm just sharing that calmly with everyone because I want you to tap into the exoteric and decode so that you can get within it and find those deeper layers and see why this is all orchestrated accordingly. And it's to get retail scared of this market, to get normies scared of the market, because that's how they play on the sentiment side of things. They know that the way you control markets is by controlling people's emotions. And the Wolfpack has learned by now, get your emotions out of this market and use your emotions for real life. That is how everything gets enhanced as a sophisticated investor. So moving on, this is also one last connection I want to be making with this December 19th is I guess you could technically say it is 2 full days since the start of the Shemitah. So we have the number 2, and this number 2 has been everything this year because we're in the 222 year. Hebrew year we left was the 22, etc. And I just talked about that moments ago. So Monday could be a very big day of the moon. We know that, there's probably something to be said with that. And all those Saturn connections that I just gave you a moment ago. Let's move on to a couple more connections. Another thing that makes this day really interesting is if we connect it to the lunar eclipse, we're going to see that it is 1 month and 11 days, the 111. Think about that. So just wanted to share as many connections with that as possible. So let's move to the 20th. There's just a couple things going on with this. Kind of a weird connection, but I thought that this would be interesting for you. If we take from December 20th to Rosh Hashanah of 2023, so that's this next Rosh Hashanah, you're gonna or another thing I should say to really emphasize this, why I'm even sharing this, is because next Rosh Hashanah will be the ending of the Jubilee year. It'll be the ending of it. So we really need to pay attention to September 15th, 14th, 16th, as much as we did with last Rosh Hashanah, the end of the Shemitah, because this is a cycle that comes around once every 50 years, and we're living through it right now. So this isn't a normal Shemitah cycle. When you're in a Shemitah that leads to a Jubilee, it means that the 3 years surrounding it are super important. You got the year before leading into it, which is usually a crazy bull run. Then you have the year of, which is where you see destabilization and big market corrections. And then you have the following year, which is the Jubilee. And that again brings an immense amount of energy, whether that be restructuring, maybe that be war, maybe that be change of power, maybe that be, that's really where it starts to, and it goes in threes. And I believe Argentina just won their 3rd World Cup, correct? You guys could let me know if I'm wrong about that, but I believe they just won their 3rd World Cup. So use this stuff that we're getting in the sports, in these big rituals. Use it, because that's how I've been decoding for a while now, and it's been amazing. It's been amazingly helpful. You guys got to remember, and I think this is some really crucial words of wisdom, things like the World Cup are prana harvesting, like literally like energy harvesting experiments. They know that this is how they can suck the life force out of so many individuals. And I'm not against athletes or people who play sport. I think playing sports is amazing. It's super healthy to move your body. It's great. I think we should teach our children sports as long as we don't include the pride to come along with it. But with that being said, we all have to admit things like the Olympics and UFC and this is just Greco-Roman ritual. That's all it is. It's throwing people in the Colosseum and seeing them beat the shit out of each other. That's really all it is. It's sport. And the way you control the masses is with bread and circus. So there's nothing wrong as a conscious individual consuming this stuff as long as you're not getting emotionally invested into it. Have fun with it. It's entertainment, right? Great. But the 99% of humanity, they forfeit all sense of self to these events, and they become the World Cup. They become their favorite player. They become the sport. You have to remember that energy goes to these vessels, if you will. The prana goes to those vessels. So this is why I decode the way that I do. I'm taking where I know the prana is going, where the life force energy is going, and I'm using the code around it to be able to determine how the rest of the year, the rest of a sequence of time will unfold. We did that with the Super Bowl, and look at how that turned out. Every number 14 and 15 connection, 22 and 23 connection, everything that was tied back to it, we were able to predict with an insane amount of accuracy. Going to these eclipse rituals to, even some of these key dates that we're seeing now, like Sam Bankman-Fried getting arrested on that exact date connected to these numbers. So I just want to share that because maybe it'll help people become better decoders. Now, the connection here that is amazing with the end of the Jubilee with September 15th of 2023 is this is a 269-day cycle. Why that's so important is if we look at the last day of Rosh Hashanah or the end of the Shemitah, you're going to get the 269th day. So that's a pretty important connection because we're taking from one Rosh Hashanah, connecting it to another one, and we're getting both connections coming back to the 20th of December. Okay? So that's why I want you to look at this because there's a lot of twos in this date as well. We have the 2-2-2-2-2. You could even consider you could even consider this 22nd date as a similar kind of function, but I just thought that that was one thing I could share with that 269 number. That shows me that it's not only connecting to Rosh Hashanah of the end of the Shemitah, but it's connecting to the end of the Jubilee as well in both directions. It's like a ripple effect if you want to look at it that way. So another thing is we have the 11 days left in the year as well. In 11 date numerology, and 11's a master number, really important. As well, we have Christmas Eve, which is on Saturn Day, and we have Christmas Day, which is going to be obviously the 25th. Christmas Eve, the day leaving 7 days left in the year on a Saturn day, and that is the number of Saturn, and it has a 15-date numerology, which is, Pretty interesting. And 89 is the 24th prime number. So that's important as well. We've got some Jupiter connections. Anything tied to 15 is tied to Jupiter. So we have 2 Jupiter connections right there as well. We have some Jupiter energy, some Saturn energy, and that is the mythological story at play. And that's why we need to pay attention to this stuff. And it's happening on the purge day, pretty much. The day after Saturnalia is done. So Saturnalia will be on the new moon that Friday, and then it transitions into the Saturn day, the last day, with the day leaving 7 days left in the year. Okay, final thing to say about the dates is we have Monday, December 26th. The stock market will be closed that day. So the crypto market will effectively be trading alone from Friday close, which is this date right here, the new moon. It'll be trading alone from that moment all the way until the 27th. And I don't exactly know if maybe the Forex market or the Dow Jones will open up like late day on the 26th. I'm not entirely certain about that. It's not that important, but something to consider. And the reason why I'm saying this is because around a new moon, and the new moon being the 23rd, around the new moon is the time frame we anticipate a microcycle top. But that's a microcycle. And what I've been trying to let people know now for a while is to anticipate the finality of the bottom for the crypto market by the January full moon. And this is where we're going to pivot now into the stock market analysis. I think this will be really important for all of us to see really where my mind is at with the upcoming month into the full moon of February. So those are the 2 big full moons, and I'm going to lay out I'm going to take a lot of stuff that I've already talked about and just refine it as much as possible in today's episode. So let's get into this chart really quickly. This is the Dow Jones, the US 30, and you could see some sort of descending, broadening wedge type pattern. I'm not really as concerned with the pattern as much as I am with just this resistance trend line that has become back tested for the first time since we've had a breakout. We had 1 touch point, 2 touch points, 3 times a charm. We came down to the bottom of this support line, and then finally we decided to extend a little bit above it. I do believe that this is a top candle. Right there, what you see is an absorption or a rejection candle that is pretty noticeable with that huge wick to the upside, but still a green candle. And, this is where you're going to start getting divergences form, et cetera, et cetera. But this 8 sloping pretty harshly to the downside, and this 55 converging eventually with this trend line, we're probably going to have those 2 moving averages pinched together, and that's going to make a decision on where this wants to go. But this came down through this peak pretty harshly, so we broke the high in the structure right here. Then we came back and broke down through it. That's important, okay? Because this trend line does matter. We're back testing a prior resistance, which could flip as a support. But I just want you to know that the next level is the 55, and if it can't hold this 55, the next level right there is going to be 30, let's just call it 32,000 points on the nose. And then we could slide all the way down to the bottom of the channel again. Now, the timing behind this would naturally be the full moon of February. So the full moon of February, I believe, is like the 6th of February. And if we zoom out now, you're going to see that there's a really important horizontal level to consider. And that horizontal level is right here at about 26,000 points up to about 27,000 points. We can see we got within that range back in 2018, rejection. We got sucked back into that range, another rejection. Then this right here was a really odd moment in the stock market. But if you consider where this is at and you want to compare it to the crypto market, this was when Bitcoin hit the all-time high of 20,000 and then rolled over to like 3K. That was this whole moment, and you could see what the Dow did during that time. So it was an overall pullback correction for the market, and crypto got the worst of it. Crypto lost pretty much 90% to 95% of all of its market cap. Bitcoin lost about 85% in this move right here, as well as the top altcoins were losing about 95%. So that's a comparison of this moment. But look at where we come right back up, right to this area again. Rejection. And then finally, when we broke above it, this was the C-scam crash back in March of 2020. We gravitated right back up to this range. And then if I really zoom in, you're going to see the importance of these 2 white lines. We got a rejection, holding sideways, trying to hold it as a support, but then having a little spring right here. This is a really odd W pattern, but needless to say, when we get these wolf crosses with the 8 above the 55, that's go time. Especially after you have this type of perpetual uptrend structure, it's given, and you can use your levels, which is here your prior high, to determine when you're going to have continuation. I hope that makes sense. Maybe rewind what I just said if that was a little confusing. But needless to say, wolf cross followed by new higher highs in the structure after being sideways. This is all kind of signal for go time to the upside. So here we are, and we've actually come back down into some of these levels of the highs back here and the highs over here. This tells me that if we're going to break one more leg lower below 28.4, we're coming down into this white line, and that would be perfectly in alignment with this yellow line. If you look right here, this moment where the yellow support line moves through the first top white line to the second white line is between the full moon of January and the full moon of March. If you go back into prior iterations of the Shemitah cycle and bigger corrections in the market after the Shemitah, we tend to get our lows in after the post-cycle peak in February, March. That's just the time frame. And that makes a ton of sense, actually, because the Julian calendar, we're using the Gregorian calendar right now, which is a complete scam, but it's putting our New Year's in January. The New Year should actually be March. I guess you could call it March 20th if you really wanted to get specific, but it's irrelevant. Let's just call it March to keep it nice and simple, because with the stock market, you're closed on the weekends, so you have all this time being closed. So that's why I don't want to look at March 20th specifically. I just want to look at the month of March. And we even have back here the C word, C scam crash. We came into March. So I just want you guys to consider that for me, if I had to be super specific, I would say it's the February full moon is when we're going to come into these levels. And that's pretty damn soon. I mean, if you were to look up till full moon, we're looking at about 50 days, but that's 36 trading days for the stock market. So that's pretty damn soon. Crypto is going to be trading way more because it's available 33% more of the year. But I just want you guys to consider this could be a fake out to the up. I mean, I believe it's a bull trap, fake out to the upside. We will have confirmation of that. Unfortunately, we're not going to be able to confirm it until we break the low in the structure, and that could take some time. But as quick as it likes to go up is as quick as these coins like to come down. We see how pumpy dumpy the Dow has been. Just want you guys to keep in mind, if we come down to 26,000 points for the Dow, that's going to shave off a lot of market. Like, you're going to notice that the economy and the talk about the economy is just going to be a completely different vibe. So I want to quickly look at the S&P as well, because there's something to be said here with the timing. I might have shown you guys this chart before, but let's look at what's going on here. I'm going to turn off this moving average. What I did was I measured from top of this support down to the resistance, top of the support down to the resistance, and I'm getting a range between 14 to 22% correction. We got rejected again off the top of this, so that's 4 rejections in a row, okay? This is a very confirmed resistance line to consider. And it was perfectly at the 0.5 fib, which is kind of the area that you call for what we call a dead cat bounce. Anywho, coming back down to the 236 is ideal. Like, I think that's probably going to happen into January full moon, and then breaking the 236, we're naturally going to have the double bottom, which would fulfill the 14%, the lowest correction we've seen thus far. Now, breaking below there, you're going to have a pullback down into probably 3,200 points. Now, if we look at where that level is, again, we do have some proof that 3,200 points could be a solid level. We have this pullback right before we had the bull trap plus huge correction. Then we have getting gravitated up to this trend line rejection, a little bit of play there, a back test, followed by another back test, followed by another back test. So I think 3,200 points would be a solid level to look at to the downside, and that's only about 22%. Now, if we were to measure from the current all-time high on the S&P down to this level of 3,200 points, That's 33%. That's not even as massive as it could actually get. This can lose 50% of its value. And if it's going to do that, I would anticipate that it does it into the eclipses of 2023, the October eclipse. So that's going to take time. But we know the stock market is much less volatile. It takes much more time for it to unfold and do what it has to do. And I've been calling for lows, to anticipate lows in the stock market 1 year after the end of the Shemitah. So that's September to October of 2023. The crypto market, on the other hand, I believe will, at least for Bitcoin and maybe Ethereum, will be in a process of recovery, while the stock market is continuing to make new lower lows. So seeing this break of this level right here, 3,400, would confirm a move down to here. And that, for me, would probably be where I start to anticipate an automatic rally. And take everything I just said about the Dow Jones and consider that as well. So what comes after a selling climax? Well, it's an automatic rally. And after an automatic rally comes a spring. And that's why I feel we could maybe come down into 3,200 points, then come back up maybe into like 4,000 points, maybe 4,200 on an automatic rally into March, April, maybe even as late as July for the stock market. Then roll over super hardcore into September, October, November, and even make new lower lows. That would be your Wyckoff spring. So this would be textbook, especially look at this freaking look at this bull run that this market had. And for what? For what reason? Because the Federal Reserve printed money out of thin air and put it into this market. That's all. Belief. So just consider this analysis, guys. Like, we are going to have recovery faster in the crypto market, where we have our corrections faster. We have more upside potential. We have more downside potential. And when I say faster, I just want to consider that is why I think January full moon might be where we're getting the finality of the lows for Bitcoin. And that usually typically adds up to the rest of the cryptos as well. But we need to be open-minded to the fact that Bitcoin is about to enter a solar cycle. And during a solar cycle, it's not good on dominance. Well, let me just say this. Bitcoin does really damn good for solar cycles until Bitcoin hits an all-time high. Then it flows its liquidity into the alt market. But during this time, from now until, I'll say, the halving, which is going to be about April, May of 2024, Bitcoin's dominance is going to recover. And as it recovers above 42% into maybe 50%, maybe even 55%, it's not going to bode well on alts. So I just want to let you know. And there's a difference between the USD price and Satoshi price. But taking what I just said and adding up the fact that we have 20,000 useless shitcoins in this market, I would not be surprised if sometime in the 2023 year, we have an event for the crypto market that removes a substantial amount of the nonsense in the market, and that will flood that excess liquidity into stablecoins, Bitcoin, Ethereum, the ISO 222 tokens, and perhaps other projects that are tied to other tech companies, fintech companies that are part of the club. Just consider what I'm saying, be open-minded to what I'm saying, and I would love to know how you guys feel. So let's move on to the DXY, because this plays a role in this as well. So I shared my DXY analysis, I believe last week, but I just cleaned it up a little bit. We have this big W breakout. We have our neckline sitting actually at 100 flat psychological. We have this little dip up, but this was because of the C-scam crash, which created a deflationary spike in the dollar. So this is irrelevant, this spike right there. Kind of looks like a lightning bolt, right? It makes me think of Jupiter. What matters most is here, this high. This high matters the most because look at the chart. If I was to zoom out to like a 5-day. So here you have an obvious buying climax going back to 1985. Then you have your selling climax, automatic rally, and this is your spring. This is like the most beautiful example of Wyckoff. Let me turn off everything so you could really see how clean this is. Buying climax, selling climax, and you see the selling climax took time, man. It takes time. It's really choppy. Living through it feels weird. But when people want to talk about the bottom, they need to understand that it's not a week, it's not a day. It could be multiple years, okay? Bear markets, as they're called, take longer to develop. Bull runs are short, sweet, fast, and just it's too much FOMO. And you got to consider that. But anyways, getting back to this looks like a textbook Wyckoff pattern. Blow off top, like look at this Christmas tree. Clearly overextended, really sharp, like syringe-like top, huge correction, bull trap, come down, get your selling climax in. And I would call the selling climax these 3 points. Then you have an automatic rally, which would be your break of highs. You're probably going to see hitting into the golden pocket. Let me delete this and show you. Okay, yeah, so you got right below the golden pocket between the 0.5 fib into the 618, and that's normal. What I teach is typically crypto analysis, not Forex analysis. But with Forex, you just consider less volatility. It's amazing, right? We come up slightly above the 0.5 rejection, come down, break the 236, and then you have your spring after that failed attempt at a double bottom. Now, look at the way that this unfolds. After your spring, you break above this descending trend line, this resistance line. And when we broke above it, we back tested it a bunch of times, confirming that this is a confirmed recovery now that we broke out here. I've been telling people the dollar's not going anywhere, not until at least 2029. All right. This chart looks gorgeous. Like, I mean, if you really know Wyckoff and you know what you're doing, you don't even need any moving averages or RSI or MACD or none of that shit. This is gorgeous. Buying climax, selling climax, automatic rally, spring. Here's your recovery test. Now you're in your process of an SOS. An SOS will be determined by a break of 120. I don't think 120 is coming just yet. It might happen. It might take a couple years, man. Like, to be completely honest, like 120, a break of 120 could happen this September because of potential market correction, like I exposed earlier. But we'll just have to wait and see on that. Now, if we start to break above that 120, we're going to have an SOS, and an SOS will come up. We're working with thin air. Seriously, because 120 all the way up to like 140, there's nothing going on there. Yeah. So, dollar gonna remain the world reserve, gonna remain strong as fuck. You know, as we develop more and more and more towards the PSYOP of Agenda 2030, calling it a PSYOP because it mostly is just to instill fear in people. But what it's really doing is it's making people think that the system's going to completely change, and it's not. It's going to be the same system with just a different protocol involved. We'll have the CBDC, we'll have the blockchain technology layer in the background, sure. We'll have the tokenization of the stock market with SOFR and Ameribor, sure. But I am telling people, as I've been telling people before we had this deflationary spike, the Shemitah that will come in 2029 will make the decisions for the U.S. economy and the dollar. As for now, U.S. is in a power position. China is not. When people talk about China being in a power position, I've disagreed on that since day one. That country is like a zombie apocalypse. And what we're seeing here unfold is just equilibrium over the last 10 years. Or actually, I'll say the last 20 years since 9/11. We're seeing equilibrium. That's what we're seeing. So this big event that occurred with the Fed printing all that funny money back in 2020 during the C scam, it's coming back to reality now. But they need to balance the bond market, which interest rates, they need to balance all this stuff right now. And that is what they use the Jubilee for. Okay? So we need to look at this very esoterically, even though all these dates are available for anyone to learn about. Moving on. This back test that we're getting here, we could dip into the neckline, maybe 100, that 100 dip. I don't think it's going to happen immediately. I think it's probably going to happen in March or April or May. That's probably the moment where we'll see March February, March is probably when we'll see that. But early February, I believe we're going to have a little bit of uptick just because of the analysis I shared earlier with the stock market continuing down more. Stock market goes down, DXY goes up. Okay, now we're going to look at total market cap because I think this matters. This looks super messy, but I just want to show you what's going on here. So here we have, it's not a clean pattern. I'm not using this to be a clean pattern, but rejection there. We have a little bit of a triangle-ish like thing going on, but again, please don't take this as seriously as what I'm trying to show. Just this measured move area from there to there. Let me get rid of this. It's too much on the screen right now. If I go to the breakdown area, now we're looking at coming down into this level right here, and I believe that area is perfect because it aligns with two things. One, it aligns with the 1-6-1-8, the golden ratio of the bearish fib pull. If I'm taking a fib pull from the swing low to the swing high and from right to left, this is something I've been showing you guys for the past year. That's check one, which is something we use to determine a really big downside move. So that's kind of like our crystal ball. Secondly, if we pull from the last cycle, swing high to swing low, which is a regular fib pull. Let me just make sure this is on fibs setting. Yes. You can see that that level also aligns with the 888 fib, and it aligns with this little cluster right here where we got the rejection, tight back test, and then we entered the finality of the bull run. So just consider that this level of about $600 billion aligns with multiple forms of analysis. That could definitely happen before the end of this, before the end of the Jubilee, pretty much by September, October of 2023. So 600 billion on the total market cap chart, I think is crucial to keep in mind. And I think that there's a lot of opportunity for that to occur. Excuse me. So I'm going to delete this pattern because I don't really give much of a shit about the pattern. It's just if we can't hold this base layer into the January full moon, I would not even be surprised if there was an opportunity to move down into it that soon. Maybe into like 650 and then have a wick down into the 600 territory and then pop back up. That'd be great, honestly, because that'll be one of the final shakeouts we have that'll confirm a potential move into our automatic rally. Now let's get to Bitcoin. Okay, so Bitcoin had it shake up to this level right here, about 18,400. And what did I tell you guys? I said this multiple weeks in a row. Pay attention to all these wicks, and the fact that this was a 150-day support. So it's normal for us to come back into those liquidity zones. And the fact that we got rejected on it, that doji is pretty clean. And then two red candles followed by this red candle here, which is clear that it broke that support. Now, we're trading alone right now over the past couple days, so this data is just crypto data. We don't have the stock market to bring in what it typically does, and the CME is also closed. So this level right here of 16.2, that's a level that would need to hold. Otherwise, that would be my signal of breaking down to 15,000 and maybe even taking another leg lower. But we have the new moon coming, and I don't necessarily think we have the juice to make another high in this cycle based off that the overall energy that we have in the market. So it's like a trend. It's a ranging thing that I'm looking for. And that's kind of where I'll wrap up the analysis actually on Bitcoin, Ethereum, and what I think XRP is going to do as well. So we're just going to range, honestly. And let's look at some of the moving averages and see what's going on. Now, this 55 simple moving average, clean rejections, definitely an important thing. We're seeing the 8 simple moving average slope to the downside, not good. Let's look at the weekly. Let me turn off the drawings. Weekly 8, we're continuing to slope to the downside. Rejections, multiple weeks. 55 still sloping pretty hard to the downside. Like everything is having an issue on these macro candles. And I've said that many times. Like we need to have sloping to the upside on these macro candles, on these moving averages to start getting that momentum towards our or I guess we can anticipate momentum towards the automatic rally phase, which will be Bitcoin potentially getting to $40,000. So this right here, rejection of the 13 EMA, not showing strength. Got the 5-day all pointing to the downside, 3-day getting a little bit of slope on the 8, but closing below it on the last 3-day close, not looking great. And the 55 on the 3-day is one of the best moving averages right now. This is your all-time high, and you could see the 55 rejecting really noticeably back in March, and then again quite recently, the end of October, rejection on the 55. Now the 55 is starting to flatline on the 3-day, right around 20K. Now this tells me that if Bitcoin is going to close a 3-day candle above the 55 moving average and actually maybe backtest it for continuation, that would be another sign for anticipation of an automatic rally. The 55 is a very important moving average for Bitcoin. So I'm going to leave it at that. I think we're ranging right now, and I would not be surprised in the January full moon if we're back at 15,000, maybe even break lower. The one last leg to the downside happening in the January full moon. Let's go to ETH. Might be able to fill in some other information that could also be applied to Bitcoin. Same story, getting rejected at the 55. All of our moving averages sloping to the downside. We held this level right here. So if I was to turn off everything, you can see we have this tiny little like 2-day trading range, but we've come back to backtest it and hold it. Right now, we're in this horizontal trading range right here. God, this is messy. 1 second. I'm going to delete this, but that is important right there, that 888. And that's where we already came back down to anyways. I'm going to extend that. So let me look at another chart. I think I have a cleaner one. I'm going to move that like that. It keeps happening to me every week. Okay, here we are. So I'm just looking at this based on horizontal trading ranges because I think that's the most effective. And where we're at right now is kind of like no man's land. We're just within this median range going back to the summertime of 2022. The next level to the downside is $1,100. Breaking below that, you're probably just going to come down to 1,000, clean psychological level. And January full moon would probably be our opportunity to see a sub 1,000 ETH again. And one thing I'll say, family, is there's opportunity for ETH to really come down, like down to $600, $400. It's really possible. So just, I want people to be aware, you know, like I'm being really patient on when I start reinvesting in this market. Because just ETH hasn't given up as much as I know it could give up. And when it starts to, it really gets bad. Again, that's not me trying to push people away from ETH. It's my second biggest holding, and I think that it's going to continue to be an important position in my overall portfolio. But yeah, could get bloody. And we've only had, like an 85% correction thus far? 82, only 82%. This thing came down 95% in the last cycle. And then it recovered. Bitcoin recovered just as much as ETH did. Okay. So that's why I was telling you guys before about Bitcoin dominance flipping. When Bitcoin dominance flips, like these alts don't do the same miraculous shit that they did back in this moment right here. Okay. So this gain, let me just show you specifically. From the automatic rally, we did 355% for ETH. Let's look at Bitcoin. Bitcoin did 336%, almost no difference. But what was the safer play? Did I delete XRP by mistake? Apologies, family. 1 second. That's really weird. I don't know why that would go away. There it is. It's unfortunate that they don't give you like a little warning if you delete something by mistake. Okay, let's look at XRP on the automatic rally. Oh, Jesus. Yeah, it's like 200%. Like, it's better to be in Bitcoin during the down cycle. Seriously, like, it's undeniable. It's so much better. Less volatility to the downside, less likelihood of breaking supports, less likelihood of a lower low spring, less likelihood of going to zero, less likelihood of, like, you could just keep saying the pros and cons of it all. You really want to think altcoin heavy when we're in a backup phase of Wyckoff heading towards a new buying climax. But, during this recovery, it was just as beneficial to be in Bitcoin as it was Ethereum, and it did better than most altcoins during this recovery. Bitcoin did. The least volatile one. So just think about that, Again, I'm not a Bitcoin maxi. I'm not trying to push. I'm just showing you the facts in the charts. So automatic rally, like, I'm more keen on having a big Bitcoin position and being patient to let ETH come to me. That's kind of like what I wanted to share. But anyway, so I gave you guys the downside levels. The upside levels is if we see a break above 1,350 on a daily close. That doesn't mean we're necessarily going to be breaking any structure, but we could be swiping up to like 15, 16. Now with the new moon, it would be potentially a move up to 1,350 perhaps for an M. And then that M would have a breakdown of, even down to these wicks here, about 800. Let's look at XRP. Okay, XRP, nothing really to follow up on but from the last analysis that I did. We can see clearly we're holding this horizontal range. Next level of the downside is 31 cents. That hasn't changed. That condition hasn't changed. And then we have this trend line still in play. This kind of becoming a very boring, play here, but that's how this coin is. It's boring, and then it pops, and then it comes crashing back down, and then it's boring, and then it pops, and then it comes, it's the same thing over and over and over again. Not me throwing shade at this. It's the Red Pill podcast. I'm just letting you know, like, that's the way this coin moves. So we don't need to have the most thorough, specific, advanced TA on it. It makes things kind of simple when you're just returning back to ranges. I'm just actually going to leave it at that. Your upside level's 38 cents. Your downside level's 31 cents. You have this trend line coming back into it. Doesn't mean anything. At best, breaking up would be 44 cents. And I highly doubt we're going to see 44 cents before potentially seeing down at 31 cents or lower. So what that would mean is perhaps into this new moon, we come back into like 38, 39 cents, get a rejection, come down into the full moon, and that could be 31 cents or lower. That'd be the play. That's the play that I'm sticking to, at least. Okay, now we have Hex. Got a lot of Hex people in our community, and it's happened since me doing a couple interviews with Crypto Coffee, so appreciate him for having me on, and I perhaps will go back on his show again. So if you guys want me back on, go reach out to him, let him know. I was the one who revealed to expect this big correction for Hex. And not only did we see that bigger correction, but I shared in my second interview with him to expect 0.22. And now we've seen 3 times us come down into that level. And you see where I had it placed. I have not moved this, by the way. I have not moved this. So that's my selling climax targets. We hit it to the wick. So we got wicked down through here again, and then again, like literally to the exact level. And it keeps wicking below, and there's clearly a 0.25 cent level thing going on where it keeps getting bought back up. It's only 3 iterations of this, so keep that in mind, but we're just seeing a perpetual downtrend. High, lower high, lower high, lower high, lower high, lower high, and now we've broken to lows. And this is confirmed. This wick initially looks like a liquidity thing going on a specific exchange, but now that we've seen it dip into those levels multiple times, we could confirm that Hex is officially trading below 0.24. That right there to me seems pretty much like the finality of a selling climax. So that's a positive thing. Well, 95% of it's about, okay. Yeah, so this is pretty much completed it all. Now, again, you see at this bottom red line where these 3 big wicks have touched was right into this peak before it had a back test and then went parabolic. So it's a very key level to come back down into. Now, if this thing wants to dip lower, which it absolutely can, and don't take that personally if you're somebody who holds Hex. Like, I'm not trying to hurt people's feelings right here. I'm a technical analyst. You have to remove emotions, all right? But this is your level. That's it. We got 1, 2, 3, 4 back test. Boom. All right. So it's also 0,137. 137 is the 33rd prime number. Let's keep that in mind. Let's see what Hex is giving us. Oh, I got the 15. That's why this coin's doing so shitty this year. Well, not only were we in the Shemitah, which is the year of Saturn and Saturn's hexagon, so hexagon ties back to all of this, but we have the 15, and everything with the 15 has been negative. That was like what I was saying about the World Cup with France. France being 47, which is the 15th prime number, and then as well, it has 24 Chaldean, and the Jupiter zodiac logo is 24. This 15 is tied to Tiger, and Tiger is the striped planet, which is Jupiter. So that's how it was all connected, and that's why I went ahead and said I don't feel good about this 47 with France, and I assume Argentina is going to win. But anyways, moving on to Hex, that 15 is definitely not helpful, and we see the way that's played out. Of Hexagon, that 31, 11th prime number. So this is like, that was the Twin Towers event. It had an amazing bull run, and now it's just come back down to reality, and there's definitely a potential for it to go lower. But remember what I taught you guys about the selling climax. The selling climax is not just one day. It could take a little time. So we have to see how this January full moon goes, because this is one of those tokens that can definitely keep dropping more and more and more and more. Like, there's no real reason why. It's just speculation. It's like all other things. It doesn't matter how strong communities are. Like, I think one of the things that people are going to learn throughout being in crypto for the past couple of years is the communities that solely focus around one coin doesn't mean shit for price action. Like, sure, it could have been a big reason why this had this meteoric rise, but ultimately everything was doing really well in a similar time frame. I mean, what did this do? 15,000%. I mean, that's me taking off the range of lows. Look at what Theta did. And again, maybe Theta did overall more gains, but I'm just saying, like, look at what's going on here. I'm taking from a similar level. I'm not even dipping as low as the C-scam or there. So it's very fair, this pull right here. Okay, we got 25,000%. So like, other coins have done this shit too, is what I'm trying to say. I just want people who are in this community that like Hex and Pulse Chain and all the new updates and that kind of stuff. Like, just remove your emotions from it, remove the culty shit that comes along with it, and that will set you free and make you a much, much better investor. And by the way, we're going to get to Theta and a couple more tokens, but I just wanted to bring that up because I feel like that's what this community, the Hex community, is sort of suffering from. You know, when I shared that I thought this coin would come down to 2 cents, when I shared that I thought it would come down to 2 cents when it was 18 cents, people were really upset with me. And I was trying to let them know, like, I do TA. I don't have the time to research the coin and know about all the metrics, and because to me, tokenomics and all that other shit is nonsense. These coins will lose 95 to 98% of their value. It's just the clear pill, and it needs to be swallowed sooner than later. Otherwise, you just get lost in the sauce, and you keep going with external belief, and you never become better at investing. And I think that that's just really important, because sure, this project perhaps has a future. Sure. I'm not trying to speak negatively on it. I'm just being as transparent. And it's not popular, by the way that I'm talking. This gets people really upset and offended, and they want to unsubscribe. And I get it. Because they invest so much belief into Richard Hart and Hex and the project and the community. But there's a chart to look at. There's some esoterica to consider. And I just really want you guys to have an amazing bull run to come. I want this community to fucking thrive, and you're gonna thrive with the better you get at behaving with that emotional side as we go through this finality of the bear market into a recovery phase, which still is gonna take some time. But anywho, getting back to this spring selling climax idea, I should actually remove this spring because it was to talk about this analysis, but now we are way past it and we're more in that selling climax zone. So I have a feeling that this is very possible for us to break below now that I'm seeing that this coin just has huge dumps where whales in this project just dump it. That's why we're getting these wicks. Yes, it's getting bought back up, but this can only happen so many times before the ground beneath you falls from, you fall from under it. So the next level would be there, 0.137. And now we're looking at what, 97%? 97% loss. Now, ETH lost 95% in the last cycle. Lots of really top projects lost 97, 95% in the last cycle, and then they recovered pretty well. Not all of them recovered back to new all-time highs, but a lot of them recovered. So be cautious on this thing. Be cautious. That would be my next level of the downside. As for upside, I would actually maybe assume that we have somewhat of a descending resistance here, which aligns pretty nicely with this horizontal level. The issue is if we can't get back above 0.28, not going to look good, because right here we had a test, here we had a test, and when we broke through it, now we're starting to show that this level right here, this red line on 0.28 could flip into a resistance, okay? So getting above that and another rejection in this area at like 3 cents, you just roll over again, and that's really something to look out for. Now, if you can get above this 236, if it could start trading above 5 cents, then that would look pretty solid. And then we still have this trend line right here to keep in mind. We have 1 rejection, 2 rejection, 3 rejections. Four times is definitely possible with an altcoin. And you wouldn't want to even consider removing this trend line until after you get above it. So I'm going to keep this trend line on my chart for the foreseeable future and see how it goes. Now we're going to move to Thorchain Rune. It's been a while since I covered this. Okay, so I have covered this maybe after this moment here. We have clear downtrend because we have a high, lower high, lower high. And then after the third rejection, breaking through, seeing resistance where it used to be a support, coming back into it with a rejection. This was clear sign to GTFO. And now it's gravitating naturally down to the 1618, the golden ratio. This is something I teach you. I talked about it earlier, pulling a fib from right to left, from the swing low to the swing high. That will give you the 1618 on the downside, and that is how you can find your downside level, the bigger one. And think, this pull could have been done back in July of 2021, family. Here we are 470 days later, and you had within reason your lower target. It got within 10, 12%, 10% on the wick. That's pretty magical. And the fact that we have this upcoming January full moon, that could be the time where we start to test 90 cents. But that thing that I teach you, that one thing, no one needed my mastermind course for it. You were getting it, lots of examples every Red Pill podcast. And I've even had people combat me on that for some odd reason, because they don't know that you could use fibs in both directions. But anyways, this analysis is amazing because you could have known almost 500 days in advance where this coin will eventually come back down to. Now, this is a very clean level because we have, let me show you a couple of horizontal levels. I just like to do these because I think it cleans things up and it makes things really nice. So let's zoom in. We have rejection, 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 back test, buying climax. So we know that 118 is a very important level for Thorchain Rune. Now we kind of snaked around it a little bit, but it looks like we're on our way to return down to it. So technically a break of 108 will bring you to your psychological $1, and then that would be your opportunity for 90 cents. But I just want you to know that holding this level of 118 is perfectly normal, perfectly fine. And if I was to get one layer lower, it would be 77 cents. 77, 78. So I'm going to leave that there, and maybe we could follow up on this in the future. I try not to delete any of this kind of the lines that are drawn stuff, because I know we go over them in a couple months. We might retouch on Thorchain Rune, and it's cool to just go back and see. Okay, so this is just a horizontal level I'm considering, and that would be about 77 cents. And if we were to get that move, we're looking at 96, 97%. Okay, so that would be a real completion of a selling climax. And that right there, yeah, I would say that's probably Damn, this thing did good. Look at this shit. 200,000%. Fuck. So yeah, this thing needs to lose so much more. Okay, I'm going to throw another line in there. I think this thing probably could come down to here. And the reason for that's pretty clear. You have your back test here after your rejection of the top line. This is your horizontal range being formed, coming back down to it a bunch of times. Looks like 3 tests before finally having that breakout. That's around 34 cents. I'm not just making this shit up out of thin air. Like, that's clearly your horizontal range where you got stuck at for a moment before blasting off. That'd be a 98% loss. And for a coin that's gained a 200,000%, of course it could come down into this level. So that could be completed in the year of 2023. In the short term, though, I wouldn't be surprised if we came down to 70 or below 90 cents and then started our automatic rally. And then we'll have our spring later on into the 30-cent region. So that's like a get the hell out moment as your automatic rally. And I hope I've instilled that in all of you. When we have our automatic rally, I will be de-risking a majority of my altcoins. I don't give a shit what people say, because I know how this cycle works. I know that once we have the automatic rally, you're stuck for 2 years on coins that have no working technology or just useless bullshit. Get out of them when you can is really the best advice. And if we're going to see Thorchain Rune come up to like $6-7 again and then keel over and not recover for a year and a half more, and especially it looks like this, like I'm just showing you how this can go. Full moon, January, automatic rally. It'll be sharp. Spring. So an opportunity to get out at $5 to $6 before it rolling over to 50 cents. Sounds like a good idea, right? Like, I'm just saying, and like no one knows that that's the way this market works because people aren't anticipating the Wyckoff schematics to continue to play out as they do. And it's just important to use those. I mean, even with XRP, we could look at this. XRP was a really choppy example of all of this, but I just want to show you. Buying climax, selling climax, automatic rally, you needed to make a move. That was too quick, but that's how XRP is. It does these Bart Simpson heads. That's why XRP is going to be the hardest one to execute on the automatic rally. Look, Bart, huge Bart, recent Bart. This thing just keeps doing that. And that's why this coin is not the one to like fuck around with if you're trying to de-risk. You really need to take advantage of these huge spikes. So this was your automatic rally, and then we just perpetuated a downtrend with lower highs, lower lows. Right here, this moment was your spring. Then this was your test. This was your backup phase. This was your SOS backup phase. And then this was your, this was really problematic because it did not enter price discovery. So most people, were kind of caught up in that. But if you structurally look at what's going on, buying climax, selling climax, quick automatic rally, then you have your spring, you have your test, you have your SOS backup phase, and then you have here the finality, a short-term buying climax, and now you're just back into your horizontal trading range. But that's why we can do a macro analysis now, and I'll show you what this looks like. This is me looking at it like in a weekly, like a really big time frame. So this is your buying climax, this is your selling climax, this is your automatic rally, and then we're going to have an SOS to come. And that SOS, it's going to be a break of $1.90, $1.80. Then you have your backup phase, and that is when XRP takes off. We're talking $5 to $20. Price discovery on a coin like this could be very, very vast ranges because it hasn't had the opportunity for price discovery going back to 2017. It's 2020, pretty much 2023. So that's a positive thing. It's a super positive thing because once you get through the backup, the SOS and enter a backup phase, that'll be some of the last times to get a below $1 XRP or a $1 XRP. So think about today. This might be your last opportunity to get sub 50 cent XRP, you know, leading into, like if we're looking super long term, of course. So let's go to Theta. Okay. So Theta, because I hold some of it, I believe it's like 5-6% of my overall portfolio, pretty tiny, but it's there. And I already had a lot of this analysis prepared because it's just a project that I'm always keeping up with. So we had this horizontal trading level right here. By the way, this is a weekly chart, so this is a lot of data. It's about 80, 90 days trapped in these levels, and we're just starting to see Theta return to those levels. So I'm so glad that I drew those out because I had a feeling there's potential 55, 56 cent target. You see this rejection right here, this spike up, and then coming back into this level. So this really tells me that 55 cents is in the cards for Theta. 54, 55 cents as the finality of the selling climax. So yeah, 96%, 97%, pretty textbook and what we could expect. Now, if I show you the way this looks, we have this pattern here where it's not the cleanest pattern in the world, but I think it's important that we see these these prior supports. It might look a little easier if I remove this. We have support, 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 break of support, and now we're getting rejected on it twice. Clean rejections. This is now a confirmed resistance. But this is reaching the apex of this pattern, and there's a throwback opportunity. The throwback opportunity is what I anticipate to be the automatic rally. So we could be into the finality of the selling climax into the full moon. A February full moon, we have a little bit of move like there, but then we break through that, and then we have, well, it's not going to be that much, but you know what I mean, probably up to like $4 or $5. And that's, we could figure out the levels by pulling a fib. Be conservative. Let me flip this. Price levels on the right. So yeah, $3 to $4.50. That would be your range for your automatic rally. And if you think about that, off of this, the middle of this level up to here, it's about 500%. So that could be pretty damn lucrative to have a de-risking opportunity before this thing potentially rolls over again. So as for upside levels, we're just on this downtrend. We got to consider this trend line. Breaking above $1.32, which is this top, would actually be a good sign. That would show you that we're probably out of the selling climax. But until then, we're still on the downtrend because yesterday we made a new lower low in the structure. We even got to 70 cents. So consider that. Also consider how we've just re-entered that trading range that goes back to 2020. We're just entering it as of the past couple days. So we could play around in this territory for a little bit until February full moon. And then when Bitcoin flips, when it has its moment where the energy shifts, that's where we would see that recovery for Theta. Well, not a full-blown recovery, but you know what I mean, into an automatic rally territory. Let's wrap this up with reserve rights. I think it's been either a while since I've done this or I haven't done this, but I think I've touched on this before. Okay, this is not good. Yeah, this is not good. I mean, it's obviously not good because this was your low that you had back in October 2020, and this shit has been trading below the lowest low for a long time, and we just made a new lower low yesterday. So it's lost 97% of its value. This could go to zero. Wow. I mean, it's already a fraction of a penny, so. Okay. Breaking below the 1618 really puts you in some shady territory. I mean, you could be generous. That's me being like, I really don't like doing what I just did, but because that kind of breaks the rules, but because we're in this is price discovery, by the way. This shit doesn't even know where the bottom is. It just broke through everything, and it's maintained that for a long time now. You could see from here going up to today, we're looking at 200 days of this thing being in price discovery to the downside. Okay, it doesn't even know where its bottom is. Not good. No structure, no chart history, and breaking the 1618 the way that I showed you a moment ago. I'm being generous right now by flipping it the way that I did, where I pulled it to that area instead of there. And we could see that this can come down an additional 20%. So that would be like a 98% washout, but then it needs to hold because this could just perpetually drain more and more market cap as the finality of the Jubilee year. I would not ever touch this. This is not something I like to even look at, like charts like this are rough. Again, no offense. This isn't a Hurry and Was Feeling. This is a Red Pill podcast. But this is not good. Okay. But on a recovery, we have a couple things. This is like hopium. This is your recovery concept. Coming up into this level, we could potentially break through it really quickly and get to a penny. Sorry, I just had to sneeze real quick. But we can break through it and get to a penny. Now, there to the 888 would be your best bet. And then you could actually roll over again. So because we're in like price discovery to the downside, this is a chart that we don't really get to see too often. You know what I'm saying? Like we don't really get to see these charts that are just like on continuation of new lows. Some of them we do, but not a whole lot, especially with this where they just trade for 200 days below their low in the structure, clearly proving it to be a new resistance. So anywho, I don't like the way this looks. I'd assume this comes down to 00257, which is that fib pull, the 1618 at the bottom. And maybe in this new moon, we come back up to 005, maybe, but I wouldn't even, what does that do, right? Now, on an automatic rally, these are the ones that typically underperform as well on automatic rallies because there's no one cares. No one even wants to try buying back into shit like this. So I think maybe you'd be lucky to get back to 2 pennies, maybe lucky. And this is the kind of stuff that I think is a good example of what not to be paying attention to during this automatic rally phase and whatever's to come for the market. These are not good looking charts. So anyways, I'm going to leave it at that. We went over a lot today. I tried to cover as much as I could with the traditional markets because I feel like that's the setup into the end of this year. I feel like that stuff's quite important to talk about. We covered on a lot of dates. Also, I know it is the holidays, so I have my courses available. I'd probably be doing a course sale for the end of this month. But since you guys are Patreon supporters, you get the biggest discount available, regardless of any sales I put up on YouTube. So if you're interested in learning more about technical analysis and combining all of these strategies and having more tutorial-like lessons, consider investing in that. I believe it will be a game changer for you, combined with watching these Red Pill podcasts. So I appreciate everyone's support. I'm wishing you all a beautiful, beautiful rest of your weekend, and I'll be catching you guys very soon on the next video. Much love.